Okay, after yesterday's Fed decision, the question this morning is where can you try to put some of your money to work and what actually makes sense? Joining us right now to help us help you answer that question is Cole Smead. He's portfolio manager and managing director at Smead Capital Management. And I know you have some interesting ideas. You've been on a handful of times recently with us. And I wonder whether some of any of your ideas in the past have now changed as a result of what Jay Powell did yesterday, Cole.
Yeah, my only problem with the question is everyone's a Fed watcher, and I just don't think it's of much value today. As Buffett's often said, the markets aren't here to instruct you, they're there to serve you. And I think that's what's really being missed in all this, which is that with the precipitation in drop in yields in August in the bond market, everyone's saying, what is the future bringing, based on, including the Fed, I would argue, because the data has not fallen apart domestically. At the same time, you'd think that we have trouble brewing because of what we're doing on the short end of the curve. So Cole, we look at it like go ahead, please.
Someone else to get.
I was going to say that may very well be true, but for example, I think for you've liked, for example, the banks, Bank of America in particular, for a very long time. That is is heavily dependent, actually, on what the Fed does.
Well, the spreads are in the interim. In other words, if they're dropping rates in the short end, that's going to obviously help banks. But economic growth in the economy is the most important component to the banks, okay? And so I find it really interesting that people are really worried about the economy, though the economy is not falling apart. Where people should be worried is the stock market. Because going back to 08, 09, people look and say every time we have the stock market with some tumult like we did late last year, the question is what's going on in the economy because of that. But there are other periods where we've had bear markets and the consumer grows into that bear market, and the economy is not affected till a year into that. Okay, so that's the real misnomer here, is the idea that the economy and the stock market are integrally tied lock and step. Between 00 and 03, that bear market was led by the capital markets and the stock market. So I kind of liken the Fed cutting rates right now to 98. Greenspan cut rates then because Wall Street wanted it, not the economy needing it. And that's the big difference right now. Then it was long-term capital imploding.
Cole, the flip side of that is if the market takes a meaningful dive, whatever wealth creation you think has taken place over the last 2 or 3 years, you could make the argument, and maybe I'm overstating the case, you could make the argument that the stock market this time around has a better chance of taking the real economy down than the real economy does of taking the stock market down.
Well, especially, use Microsoft as an example. That name is a big component in the Dow. It's a big component in the stock market. Names like that are well represented, that have produced a lot of the success the last 3 to 5 years, you're right, they would take the market down. But use what happened last week as an example. What happened on Monday and Tuesday last week is one of the largest changeovers we've seen of value outperforming relative to growth. Global bond yields rising in a very precipitous 2-day run. It's continued on to a certain extent, relatively speaking. But I say that because, we're in Hotel California, guys. Okay, you can check out anytime you like, but you can never leave, is the idea going on today.
Which is also the Roach Motel.
Right.
There's
two sides to that.
Well, but like Henley says, he says, last thing I remember, I was running for the door. I had to find the passage back to the place I was before. The place we were before is cheap stocks outperform, and the cost of capital is meaningful and can impact certain businesses. The idea that all businesses are going to win is wrong, and corporate America is levered, and that's the problem. So how is all the managers in America going to win?
If you keep going with the lyrics, we're going to have to pay royalty. But in the meantime, I want to make sure that our viewers get some ideas from you this morning, because we promised them a couple of big names that you've been thinking a lot about. I mentioned Bank of America. Lennar is also on your list.
Yeah, the housing numbers yesterday. That would be, if I'm a Fed watcher and I'm the Fed watching things, that was a big number, an unexpected number. But let me go further. We're a big buyer of Occidental Petroleum, and we continue to accumulate stock. How often does Buffett go out and take a stake in a business like that, in a business that's missed the bull market? Energy has skipped this entire bull market. It's exactly the kind of place, to your point, Andrew, that we could have a terrible market and money could be made because no one has capital in that arena today.
Okay. Cole Smead, it is great to talk to you this morning. And
thank you, guys.
A great conversation, and we'll sing a little bit more from that song in just a little bit.